You have an idea to make a nice chunk of return off the stock market. You can do this, but not if you make consistent mistakes. Instead, you make a return through consistently positive investments. And these are 10 tips that I went by to make my own positive investments. So the first one is good products don't always mean good investments. Some companies I personally enjoy, I believe in their product and I know it will do well, but even so, it does not mean the business that created that product is performing well. A good example is GoPro. They have underperformed lately, even with their amazing GoPro camera. Number 2, investing is easy. Making a good return is definitely not. Nowadays, you can download an app on your phone and you can invest right away. But actually making a return that's decent is very difficult. It takes work. It takes a lot of reading. It takes reading about the company, about the industry, and about the overall economy. Number 3, investing is more about experience rather than income for beginners. And you can and you should invest with any money you have, even if it's only $500. This is because, to earn a livable wage on the stock market, you need hundreds of thousands of dollars. If you have a $100,000 portfolio and you make a really good return of 10%, that's only $10,000 and you can't live on that. So even with these small portions of money, the experience of investing will be carried into any other business endeavors that you have. Number 4, there's always opportunity and it's just hard to see, so you need to be prepared. The market has opportunity everywhere and sometimes you just can't see it. Sometimes you see it when it's too late, or sometimes you see it without time to prepare. And only take an opportunity that you are expecting and are prepared for. I prepared for Snapchat in anticipation of its earnings and having those earnings report drop the stock. Number 5, don't focus on the macro, it's just too complex. So macro is important, but there are so many factors from foreign exchange currency to political policy changes that make it too complex for a strong understanding to carry into your investing. Number 6, be confident in yourself. Don't look for confirmation from others. When you look for opinions confirming yours, you're participating in confirmation bias, and you need unbiased judgment to make good decisions. The bad of a company is very important. Number 7, choose one company at a time and read a lot about them. I only invest in maybe one company each month, and I will take the time to follow their stock, read their quarterly and annual reports, read about their competition and the competition's annual reports, and also I'll read about their news. So this saturates your decisions with information, and you need information to make positive investments. Number 8, don't make trades just because you want to. Many times I see trades that might be decent and I say, I want to make this investment, but more than often, this is just my personal desire to make money. Number 9, investing leads to business and business leads to investing. So when you invest, you learn about businesses. If you plan on starting your own business, learning how to invest and how the stock market functions is valuable information to take into your own business. It also works the other way around when you want your own business to invest its own money. Number 10, you don't have losses until you sell a position, so don't get emotional. And this is the most important point, because if you see red on your position, most of the time it's a normal occurrence in the stock market. Recessions also do happen. They're just a long period of seeing red. But the only time you should be worried about your position is if the company does something you did not expect or don't like. And even then, if you see your position down, don't beat yourself up over it because it's normal and you shouldn't be emotional about these things. So these are the tips that I followed as a beginner. They led to my own fairly successful portfolio. I'm on track to reach a 12% return. And I say you should start investing now with whatever money you have, because you can take that experience into the future when you have more money, as well as take that experience into any other endeavors that you might participate in. So that was the video. I hope you like it. Make sure you hit the like button. Also look out for Sunday's video when I analyze a company.